Hello, I'm Mario Toneguzzi, managing editor of Canada's podcast, Taking Care of Business Today with Phil Soper, president and CEO of Royal LePage. Thanks, Phil, for joining
Good
us
to
again.
be here. Good to be here.
All right, survey by you folks on mortgage renewals, and tell me what you thought was most interesting about this survey.
Well, people are obviously worried about the impact of paying present day mortgage rates. So these folks are clearly people who got pandemic level mortgage rates because today's mortgage rates aren't much different than pre-pandemic, and they haven't changed a lot in the last year. So we're talking about people that got mortgages in that 2020, 2021 time period. They were on 5-year fixed and they're rolling over and they're concerned about the higher payments.
Hmm. How many, typically, like on a yearly basis, how many people do we see having mortgages come up for renewal?
Yeah, it's a good question. Well, if you think that the 5-year fixed is by far the most popular mortgage in the country, there's a few that are longer, more that are shorter. It would be somewhere between 20 and 30%, probably closer to 20.
Oh, okay then. So that's a lot of
Yeah,
mortgages.
a lot of people, a lot of people.
Yeah. What impact does increased payments? Now, obviously, whenever their mortgage are up this year, it's a little better than was last year, I guess. But what can people expect to pay more in terms of their mortgages?
Well, it's an interesting question, and we've certainly done math examples in our seminars and things when we're advising our folks what their clients should expect. But if you think someone who got a mortgage between 2 and 3%, they'd be looking at between 4 and 5% today. So it will make a material difference. There's a few things that mitigate it. The December 24 liberalization of mortgage rules allow people to move to 30-year AMs if these aren't renewal people, but if you're a young person, you're worried about getting in the market, you
Yeah.
can spread your payments out a little bit more. And of course, you can get mortgage insurance now for higher months caps than you used to. And those with insured mortgages get lower rates. So they'd be they'd be minimized. It also depends which city you're buying in. If you look at a city like Edmonton, you can buy about 3 of the benchmark 2-story Royal LePage homes for 1 in Vancouver, just to use it as an example, maybe 2 in Calgary for 1 in Toronto. And obviously, if you even between interprovincial cities, it's a lot cheaper in Edmonton than Calgary, a lot cheaper in London, Ontario than Toronto, Ontario, that sort of thing.
Mhm.
So we're talking anywhere from a few $100s to, if you've got $1 million mortgage and you've got a high leverage $1 million mortgage, you could be talking 4 figures. So it could be a big difference. I think though there is a difference between how people feel today and the reality of their situation.
Hmm.
What I mean by that is if we look at the mortgage default rate, those who are truly in trouble as they're rolling over. And remember, we're 5 years now from those first pandemic mortgages.
Yeah.
So the majority of people are moved to post-pandemic mortgage rates today. Even if the ones that are today are material, there's a lot of people already moved. Yet the default rate, the people who are actually in trouble and are not making, they're 90 days or more behind in their mortgage payments,
Yeah.
has kept at way below pandemic norms. They were 50% higher. Now we're talking tiny numbers. It's 0.2 of 1% or a fifth of 1% now, and normal is 0.3, which is about, I actually checked this yesterday, we're about 18 times lower than the United States right now.
Oh,
So why is this? Well, everybody who's got a mortgage renewing now, virtually everybody, had to pass the mortgage stress test. So if you go back to those 2% mortgages, they had to show they could pay a 4.5% mortgage, which in fact you can get a 4.5% mortgage today. So, and employment's been strong, and wage and salary growth has been strong, and home prices have been flat.
hmm,
So the reality is people are better off today than they were, 3 years ago,
hmm.
but they don't feel it. And I
Yeah.
understand why, with the Trump tariff threats and just generally the uncertainty in the world right now. It's not a time that you just feel comfortable.
Yeah. Last question I have for you, Phil. When you're looking at the current environment, what are people typically doing with their mortgages? Like, what mortgages are they taking? The fixed rates, or are people still looking at variable?
Yeah, it's a good question. Canadians are a conservative lot. We love our long-term fixed rate mortgage. That 5-year fixed is like the go-to for so many people.
Yeah.
In this study, the report just out, 75% of people existing mortgages are fixed rate, and we see that dropping materially to 66% as those people who renew in 2025. So people are clearly getting the message that rates have been declining, and they're very likely to decline further. In other words, we're in a dropping rate environment, and locking in at today's rates for 5 years doesn't make a lot of financial sense. Now, the challenge for people, particularly younger people, is the 5-year fixed rate payment is going to be the lowest.
Yeah.
And often people sort of stretch themselves and just buy the home with the lowest payment they can get. And obviously, my advice to them is, if there's any way to go shorter term or to go variable, if you can figure out a way to do that with your finances, you're likely going to be considerably better off.
All right. Thanks, Phil, for joining us today.
My pleasure.
All right. That was Phil Soper, who is President and CEO of Royal LePage. I'm Mario Toneguzzi, Managing Editor of Canada's Podcast. Thanks for joining us.